What up, traders? What up, investors? Ken here from the Dyslexic Investor, and we're looking at the Warren Buffett, the investor that everyone knows and loves, the Oracle of Omaha, what he is doing with nearly $137 billion in cash on hand, looking at what he wants to purchase, what he's looking for, some bargains, and so forth. We're going to be discussing what basically his outlook is looking at and why he sold his airline stocks. Are going to be looking at some of his larger holdings, and then look at some more analysis of his holding companies and the stocks that he is currently owning and looking to add into due to a further decline in the market. So everyone knows that the Berkshire Hathaway had their annual meeting this past Saturday. They had to do it virtual due to the overall pandemic outbreak. We could do a separate video regarding more of a breakdown from that, looking at this overall pandemic and what Berkshire is looking at. They're thinking that this is going to take a lot longer for it to stretch out than other people think as well. This is kind of same with the same tone that Carl Icahn was saying, was basically saying that this is not going to just be a spigot. We're going to be able just to turn it back on. And they're sitting on an enormous amount of cash. It actually might be slightly more, they say. Could be around 142 billion that they're sitting on cash because they sold a lot of equity, meaning a lot of stocks in the month of April, looking at potential, looking for bargains. But when it comes down to it, Buffett's saying that I haven't seen many bargains yet. But then he didn't elaborate on saying if that does that mean there could be potential more of a downside, or he's just waiting for confirmation to see once the economy starts opening up, is he going to start buying and so forth. It's very vague, and the article does a great job explaining that in 2008 Warren was very approachable. He was giving a lot of interviews, but this time around he's been very quiet and just kind of sitting, probably sitting on his hands, thinking on what to do, looking at a potential buying opportunity. They're saying that they didn't even purchase that much of Berkshire Hathaway stock, with the plunge of more than the plunge in March was steeper than it has been in 10 years. They didn't buy many shares back even in that time frame. So does that indicate a potential further crisis? Again, super vague, not the most direct information that we're getting from the Oracle of Omaha, looking at a potential to see what he does once the economy starts opening up. So that being said, $137 billion, and we're going to look at some of his holding companies. Looking at this slide here, this is not the most updated. This is from, again, the F13 or 13F filings. This is some of his larger holdings. Bank of America, quite a few banks. So we got Bank of America, Wells Fargo, American Express, U.S. Bank Corp, Bank of New York, and then some other strange ones. They have Sirius XM. Of course, Apple's a huge position for him. Kraft Heinz, that's been, again, hit pretty hard due to that. I think there was like some financial misinterpretation, that's a better way to say it. Coca-Cola, gotta love that Coca-Cola, and then General Motors. So we're gonna look at these stocks, look at the technical sides of things, and then look at just looking at the technical side on the bull or bear side. And that being said, that even with Warren Buffett, he's not being a raging bull. He is always optimistic, and so forth, but we'll see on what goes forth. And I think so basically the article did say he sold all his airline stocks in the month of April due to the fact of I think it was DAL and Southwest he owned a lot of. So basically here, sold basically right down here in the month of March, selling out nearly half a million shares of majority of the airlines, taking a huge loss due to the fact of the outlook of having a 3 to 4 year recovery, if that, for these airline stocks. Again, I think he's over 80 something, so 4 or 5 years is not that much time, knock on wood, for Mr. Warren Buffett. He wants to see his returns a little bit faster. So this is going to be a much longer term play for Delta. I know a lot of folks out there are in Delta or LUV, which is your Southwest. Again, these things have just been completely beaten up and battered. Again, this is a totally different time in the world, trying to figure out what is going to happen next. All right, so let's go ahead and look at one of his favorite stocks. Is going to be KO, and that is, again, for Coca-Cola. They don't just sell Coke, they sell water, beverages, all kinds of different lifestyle, whatever the tagline is. We're going to do a quick fib here. Again, this thing went down to $36 all the way. And why is this thing never like there? So basically got nearly 45% cut. Then had a nice little V-shaped recovery, breaking through the 21. It tried to break above the 50% retracement, but kind of failed. This is overhead resistance, and then look for potential more downside. Looking for the 38.2 here for potential support, but due to the overall market downturn, we could potentially see a little bit of more selling for this stock. Looking at, again, the 5 and the 8 are below the 21, and they're curling down. But again, we could just kind of zigzag and potentially just trade sideways. Looking at once the economy opens up, because again, like all the stadiums, all the large events, all the restaurants, they're all not really selling Coca-Cola. So this is a huge effect on the overall market, especially for a company like Coke. So once the economy starts rolling out, I think this would be a great addition. Potentially looking to fill this gap here. Probably if it gets down to $43-ish, $44. I don't own a position in this, but this looks fairly attractive. Again, this would be more of a longer term play for me due to the fact of the dividend and the potential growth going forth. So next, let's just do one of his banks. Let's do Bank of America. Oh, and I didn't type it. Okay, please. BAC. Thank you, Thinkorswim. All right, so this looks somewhat similar to what we just saw with a lot of the other stocks. Again, it's nowhere near 50% retracement, and this is probably due to the fact of so many companies potentially going to be going bankrupt or in financial disarray due to the fact of, again, the overall COVID. Looking at, you can clearly see this. We're having a lot of issues here at the 38.2, basically having 2 touches here, kind of 3, and then kind of going back down. This still looks slightly better, a lack of a better words, that it doesn't, these aren't like sexy charts, honestly. Warren Buffett doesn't really buy the super hyper growth stocks like a Shopify or a Roku or a Team or something else, an AMD and things like that. Warren Buffett, if you're not familiar with, is a very old the KISS method of keep it simple, stupid method of just like, if I understand it, if I can understand the business, I'll invest in it. I need to understand on how they make money and things like that. But it's kind of funny because he owns a lot of banks, and banks are kind of really difficult to understand on how they make money. So anyways, to and fro. Then we can, okay, so it's again having a lot of resistance here around the $25 level. Basically looking at the 55 exponential moving average kind of being kind of a overhead resistance, and then looking for support basically around 21. Again, we did have a gap here. This looks like it was kind of filled here, so this is a little bit more of a bullish play than the Coca-Cola we just looked at. If you are not in it, I don't know many bank stocks as well, because again, I don't really understand on how they make money. They just kind of take the money from the little guy, on top of fees and other various things. But like, it's super if you were trading this, I could see, but again, this is not going to move. Well, with the market going up and down, it can move a lot. But this is not going to move 3 or 4% a day like your Shopify's again, your larger, higher growth stocks. This is more like a steady eddy on just kind of grinding higher or lower. So if you haven't had to build a position yet, I think if it gets below the 21, potentially around the $22 level, I might be selling some puts in it to potentially just get a little bit of income from this stock. But if the market overall is just having a lot of troubles and a lot of red flags, the banks are usually hit pretty hard due to the fact of that. So we don't want to touch that. Another one that has been hit pretty bad, even pre this overall mass economic decline, is Kraft Heinz, and they've been performing absolutely terrible due to the fact of you can just see this. This looks like a horrible downtrend, right? Again, this is on the daily chart. It has not broken above the 200 exponential moving average for some time. It tried to break above it, but then it kind of just sold back off. Potentially looking at it breaking above this and continue staying above this. Looking at a larger time frame, you can just see it has been a downward slope. It's kind of bottoming here, but I don't want to put my cash into something where potentially I can put it into something else, because this was an L before the overall decline. You can see here a lot of issues, a lot of huge drops on earnings, meaning that this is kind of a red flag for me. If you want to gamble and roll the dice, or what we call here at the DI Club of flipping the dice, our favorite game we like to play for earnings and different various things. We just do not know the outcome, no crystal ball. We're just going to flip the dice and see where it lands. So this is not one I would even touch with a 10-foot pole. It's just a horrible, horrible downtrend. And we can look at a further indicators here on the monthly chart. That just looks terrible, right? The weekly chart, it's kind of it's building a base. And if you just had money laying around and you wanted to put money into it, like anything around like the $25 or $24 level would probably be ideal. All right, looking here at Sirius XM, next stock we're looking at. Basically, this is performing slightly better again. This is above the 50% retracement from the swing high to low here. It's above the 21, the 5, 8, and 21 are very nicely stacked. If you're in it, you're probably doing fairly well, unless you bought at $7.40. That being said, I wouldn't, for me personally, I wouldn't want it to put money into Sirius XM. That's yeah, I don't know the reason behind it. Looking at probably some overhead resistance here at $6.36, and again, if it continues to sell off, looking at support around the 545 level. It looks like it just recently had earnings, so this would be not that volatile unless the overall market goes up or down. And then last but not least, let's look at GM. This is General Motors, and as a lot of people know, a lot of people aren't buying cars right now. I got some just lines here. So again, it peaked for the daily chart. This is basically the beginning. This is summertime, so looking at like June, July, peaked here. Let's do a fib here. Again, failing here at the 38.2 percentile from the swing high to low on the daily. Oh, and it didn't. Come on, man. All right, even better. Failed here at the 38. So this is around the $24. So we're gonna create a alert here, so we don't have to have all these lines on here. And then looking at support, basically here at $20. The only kind of concerning thing is it does have earnings coming out next week on the 6th. So I believe that is on Wednesday, right? Yep, that is Wednesday. Things are too tight right here with the moving averages, meaning capitulation. So this could be a spring higher or spring lower. I'm going to say spring lower due to the fact of my personal opinion of GM. But this, looking at these moving averages cutting into the 21, that's never a great sign. but the huge red flag here is earnings that could potentially drive it substantially lower, or it can bring it back higher depending on what they say. Again, no crystal ball, it's a complete coin flip. It's super concerning. Again, if the overall market sells off, this can easily go with it. Let's look at a little bit of larger time frame, a weekly chart on the 3-year. Yeah, it's been trading around the 21 pretty well, around the 1 deviation. I could see this again. It kind of had a bounce up, but it looks like it wants to continue going lower, with this large wick here on the top here, potentially indicating it wants to go. Not going to test the lows, but let's go ahead and actually look at the moving potential move for this. So the options are going to be plus or minus $3. That's going to be pretty significant for a stock that's $20. So $3, if it closes at $21, we're looking at, again, $3 lower, so we're looking around 17. That would be right about here. So we're looking at potentially hitting around this point here. So we're going to put a at or below. Oh, there we go. At or below here, and then I guess a 23. So we're just going to leave that marker there. So this is the lanes that GM might stay in for potential move. Again, guys, I hope that you guys took something away from this. Don't forget to hit the like button if you liked the video and you actually learned something. And if you want to consider helping the channel, consider subscribing by hitting that as well. I greatly appreciate everything. We're going to be having a live stream tonight at 8:55 Eastern Standard Time PM, and we're going to be talking a lot of stocks, charts, and economic news in the week ahead. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.